US 30 here, NAS down a little bit here this morning, SPX down a little bit this morning. So indices have been really sideways the last few days. Take a look at the S&P 500 here, and you can see that we're pretty much same spot we've been in for the last 1, 2, 3, 4, 5, 6, 7, 8 or 9 candles. We have not really moved. I do think that we have the potential to move tomorrow. Tomorrow you've got some PMI numbers and unemployment claims, which of course have the potential to move the markets a bit. But the path of least resistance for me is still up until something changes in the story, right? Pullbacks are buying opportunities for me. If we come down here, I'd be very glad, because then I could pick up some positions on charts that I really want to get long, right? NAS, I'm looking at long potential setups. Dow Jones, if we get a pullback to the 38.2, I love that possible setup. Continuations to the uptrend. Gold, I don't have a current reading on the edge finder, so specifically I'm looking for pullbacks in charts that have strong enough signals on the edge finder for me to take a trade. So if I was to filter here just for bullish and bearish readings currently, these are basically my items to watch. I'm watching the S&P, I'm watching the Nikkei, the Dow, the DAX, the NASDAQ, Bitcoin, Russell, and the FTSE. Lots of index trades and Bitcoin. So those are the things that I'm watching currently for bullish only setups. I'm not looking to short them. I'm not looking to fight that strength this year. And that has served me pretty well this year. Pretty spot on with staying with the trends. That's been the winning strategy this year and last year for that matter. So I'm bullish across the indices. Specifically, I really like the NASDAQ, the S&P, Dow Jones, and Bitcoin. And I do like the Russell, but Russell may not be liking me today because I think I might have gotten a little bit early on that one. Euro USD, I'm still bearish on this one, but this one's been really frustrating. If you're somebody watching the Euro with me, I've wanted to get in a sell trade for like a few weeks now without any real opportunities to do so, right? Price has not really pulled back very well for me to take an entry. I was watching this area, I had a setup all lined up, didn't quite get the entry, which it happens, but it is frustrating when it does because it's like I had the right idea, but I didn't have the right entry. But this double top turned into a complete sell-off in the Euro. So if you're in the Euro USD shorts, then congrats. That is awesome. I think path of least resistance for this one is still to the downside. The dollar looks really strong, and there's a number of reasons why. Look at this, by the way. Look at that. The dollar index is breaking that level that we marked. 104, getting taken out. The bulls are not messing around on the dollar right now. That is, watch how this candle closes today, guys, because that is incredibly bullish looking. I mean, the dollar has taken no breaks. No breaks. There's one red candle in here. And again, this is why I'm going back to that concept that I've been talking about a lot today and last few weeks. Fighting trends this year has been one of the most painful years I can remember. Trend following for the 2023 and 2024 has been the winning strat by far. It's not always the winning strategy. Sometimes trend following is painful and has horrible losing streaks, and mean reversion is much better. But this year, trend following has been killing it. So when we look at the dollar index and it's trending up like this, pullbacks, continuations, that is the only thing that makes sense to me right now. The dollar index is also up because we've had some killer economic data from the US. We can go look at that, right? Just as a reminder, NFP smashed expectations, right? So we had big jobs data come in much better than expected. Unemployment rate actually went back down a little bit, which is also very strong. Unemployment claims are not super threatening. Job openings in the US seem to be moderating, which is also strong for the dollar. Wage growth picked up a little bit. A stronger consumer is a stronger economy. And then retail sales. Retail sales came in better than expected. So you've got all these indicators for the US dollar that make a real good case for why the dollar looks strong. You know what else makes the dollar look strong right now? is that both of our candidates running for president have big plans to spend a lot of money. Spending a lot of money, regardless of your opinion on each one, they both have big plans to spend money, and big plans to spend money leads to possible inflation risk, which leads to the Fed not cutting rates as much. If that is our new story, we're not going to see as many rate cuts. The dollar is going to fly. So if that's what we see happening, that's why the dollar is trending so well to the upside. And that's not a trend I want to fight, right? That is absolutely not a trend that I want to fight. This looks very, very strong to the upside. And we drew this fib yesterday. Look at this. 61.8% retracement failed to hold. So did the 50. So did the 38.2. This is evidence of a very strong reversal, in my opinion. You combine that with the economic data and the Edgefinder score. Man, I'm so bummed out that I missed this idea on the Edgefinder. It was perfect. The Euro USD shorts were like the currency trade of the month that I missed. Dollar strength has been the play. It's been what I've been watching for the last few weeks, and just unfortunately missed that Euro USD short. That would have been the right trade for me in hindsight, 2020. So just showing you that, no matter how much experience you have with this stuff, you're still going to miss trades sometimes. You're still going to be off on your entries. This is why trading is difficult, right? At the end of the day, the reason trading is difficult is not because, the reason trading is difficult is mostly because finding an edge is difficult, and so is sticking to a strategy, right? When your strategy is not working or you're missing entries, it could be tempting to say, well, next time I'm just going to sell the break because there was no pullback and I missed this awesome move. Well, this is one example. Most of the time in my trading experience, you get the big break and you do get a retest, and that gives you the opportunity to get into the trade, especially if you have good confirmation from the fundamental side. Those are my best trades. However, sometimes just going to happen that variance is not in your favor and that the market continues on without you. It's just going to happen no matter what. There is no fixing, what traders will do. Here's a common mistake that many of you guys, myself included, probably have experienced. You see this move happen and you say to yourself, next time I am simply going to short right after a big close underneath support, and I'm not going to wait for retest because I missed this move and that would have been game changer. That is a very easy mistake to make. You just changed your strategy simply because of one example of when it did not work. Don't do that, because a lot of times, most of the time, you get these big moves and some form of a reversal, some sort of a pullback retests that area, and it gives you a chance to enter the right moves. I am not going to change what I've done for years simply because I missed this one move, right? That would be foolish. But many traders do that. That is how most traders lose money, as they change strategies every week. Don't be a rotating door trading strategy person, right? Stick to something, back test it, accept its flaws, right? There is no strategy that is going to make your trading immaculate, perfect all the time. In fact, one of the secrets of great trading is that great traders take losses all the time too. They just don't change what they're doing week to week, right? They stick to something. They back test it thoroughly. So just something to think about.
This edge finder thing is pretty cool. I can trade it all sorts of different ways, and for me, I like using fundamental analysis and macroeconomic data to try and make better decisions. What do you like to use it for?
I'm more of a proponent for the COT data or the business forecast tool.
Did your tooth just fall out?
It was my baby tooth. It'll come back. Hey, at least I don't burst into flames when I step out into the sun.
Trading without the Edge Finder can be scary. The Edge Finder keeps you up to date with all the most important market-moving information. Check out the latest COT data, retail sentiment, fundamental data, and so much more. You can get the Edge Finder for yourself with the link down below, or click the link being dropped in the chat to speak now with one of our team monsters.
So yeah, Bank of Canada just cut their rates, which is nice for my dollar CAD position here. So let's have a look here on trading economics. The benchmark interest rate in Canada was last recorded at 3.75%. Interest rate in Canada averaged 5.77% from 1990 until 2024, reaching an all-time high at 16% in February 1991 and a record low of 0.25. That's not too relevant. So it came out pretty much as consensus. So we can see, let's see what date are we on? It's October 10th. It's 23. I'm on the wrong calendar here, that's why. Sorry, give me a second, a bit unprepared there. So here we go. So 4.25, forecast was 3.75, came out at 3.75. So yeah, to be honest, kind of expected. I don't think anyone was not expecting a rate cut by Bank of Canada, so pretty straightforward stuff. So yeah, very good for my dollar CAD position. I'm also in oil longs here. So oil long is a little bit of a tricky one because I've been on the fence due to oil. The overall fundamentals are actually relatively bearish. The oil increase in the US increased, which obviously does hurt oil prices. However, we're still playing on sort of the Middle East tensions and some fears around the oil supply. So took a long position off, the standard setup that we go over every time I'm here, which is this 50% retracement level, which we had. Also respecting previous structure here, previous resistance, break, retest, now using as support. So far, looking quite good. So again, a very straightforward trade. Next up, I'm back in the pound dollar. So you can see here I had a position placed on Friday and I closed this one yesterday for 2% and I re-entered again this morning. So this one's currently just under 1% with our stop loss at break even. So this one was called in our Discord. But, having said that, it's not all sunshine and rainbows. I did also take a long on silver and you can see I got absolutely demolished on this one today. Don't think I could have picked a worse time to buy silver actually, but there you go. You can't always get it right. So looking to go short on copper as well at some point this week. Rate cut for CAD is also bullish for gold. Yes. Why do you trade WTI instead of Brent? There's no real reason. I just go to WTI. When I was learning to trade, the mentor that I had always used WTI, never Brent. So it's just what I sort of default to. I've got Brent here, but the price action is very similar, so there's not really any difference to me, unless there's very specific news. But yeah, generally speaking, I'll always go to WTI. So currently, I'm waiting to go short on euro dollar, and now might be the time after this current candle close. So again, took a position yesterday for 1%. So I'm looking to get back in short. The problem is that we've had, and I explained this again yesterday, that even the edge finder, as Nick was saying, was reading bearish on euro dollar, and it has been for a while down here. But the problem is the market moved very quickly, and it didn't allow any time for sellers into this market. Really, kind of had to get in either very aggressively or sit on the sidelines. So in the past. Since the 27th of September, since this downturn started, we've had 2 bullish candles, and that's it. And these bullish candles had very little volume. So it's very, very difficult to get in from a swing aspect. So I've been going more for these day trades here. So yeah, it's a case of just trying to get in these small moves over and over again and ride the downtrend, sort of getting in and out rather than holding a longer term position. So I'm waiting now for this 15-minute candle to close, and then I'll look to go short somewhere around here with a stop loss above the previous high and a take profit down at S3, so a 1 to 2.5 ideally. So we might get that one on stream. But yeah, I think the markets today have been very volatile, actually, especially the commodities. So if we have a look, gold is down quite aggressively this morning or today. Yeah, gold's down, silver's down, copper's down as well, natural gas is up. But yeah, difficult to get into buys today. I've kind of missed the move on dollar Swiss actually. So it's too late to get into buys. We're very well, I want to say very extended. I use that word loosely. We're coming into this daily 200 moving average, and we're also coming into this level of resistance here. So buying into this right now it's not the best idea. So what I'd really want to do is wait for pullbacks. So let's see. You'd either wait for a pullback to the downside and try and buy it lower, or you could wait on the daily for a break and a retest. So a break above structure, or break above resistance, break above the 200 daily moving average, the retest, and then enter to the long side. With the current dollar strength, I think that's probably the best idea. It doesn't seem to show any signs of wanting to pull back right now. Euro, pound, and yen are all just dropping like rocks. So essentially, the problem that we've got with the indices at the moment is they're very overbought. Well, I'm going to use, obviously, using the word overbought loosely. They're very expensive, but there is no real reason for them to be slowing down in terms of the momentum to the upside. However, at the moment, they are just sort of ranging. There's nothing really going on. So, yeah, I guess the only way to really approach this is buying when we have the break, or waiting until we have some sort of pullback to the downside and then buying the dip. But yeah, it's difficult at the moment to try and get into these markets. I was tempted to buy the DAX this morning because I've been talking about this for a while. It's been all over my Twitter that the DAX is following this uptrend almost perfectly, and now we're seeing rejection off this level. The problem is, do I really want to be buying the DAX at such an expensive price? And there's two sorts of answers to that. Realistically, no. But who am I to pick and choose? You know, I'm not in a position to say that I can't buy this because it's too expensive. I've got to take what the market gives me. And if we look on the Edge Finder, the DAX is still one of the highest readings. It's fourth with a reading of 7. So it's still, you know, fundamentally a nice buy. Retail is short, of course. The only negative thing here really is retail sales. Someone asked me, actually, I think this is a good point. Someone asked, why is the DAX doing so well when the euro is doing so poorly? I think this gets a lot of people confused when they see certain things happening with currencies and it's not reflected the same on the indices. So, for example, I saw another message in the chat today of why is, if the dollar's up, why are the indices not down? And the answer to that, it simply is because indices aren't currencies. They're not affected in exactly the same way. So, for example, if you look at NASDAQ and NVIDIA was carrying NASDAQ, and I think it still is. So it doesn't really matter too much what's going on with the dollar because it's backed up by other factors. So just make sure that you're not associating everything as a currency and you're looking at these assets as different assets. Do you use different EMAs on different timeframes? Yes, I do. So I use the 200 EMA on higher timeframes. So the daily and the weekly, and then on the H4 and the H1, I use the 200 and the 50. I'm waiting on gold between 27.20 and 27.25. Let's see. What was it? 27.20. Yeah, okay, I see. I understand that. It seems like a good place to buy, actually. We could even get the 200 moving average here to come and sort of help meet price here. So we could get something along these lines. So yeah, I understand that buy. James, can you tell me how you mastered your psychology in trading? I'm new to trading. Yes, that's actually a very simple answer. I think psychology is overrated. It's very, very simple. So the thing is, when you're trading, what you've got to understand is that you place a trade for a reason. So the reason I'm not worried about this trade is because I know the fundamentals. I know what's driving this market. The trade is risk-free. So what's the worst that's going to happen? I'll get stopped out for nothing. So it's almost like I didn't trick the trade. So it's no problem. When you have a strategy that you know works, that you've been trading with for years, or you've back tested and you know it works, why does one trade matter? So if you are on, if you're down 5% for the month, sure, it might look bad, it might feel bad, but over the course of 2 years, does that 5% really matter? Well, probably not, because you can make it back next month. Psychology, people make such a big deal out of it, and all you need to do is have a winning strategy, and those psychological problems disappear. The only other thing, I guess, is a risk management. Don't over risk, and you'll be fine. That's another thing that really sort of tipped me over the edge when I started, was I was risking way too much. So I was thinking about how much I can make off this trade. So if I risk 10%, I can make 30% on this trade. That's crazy. But then when it doesn't work and you lose 10%, it feels horrible because you didn't account for the loss. You were just thinking about how much you can win. So you need to always look at a trade as a losing trade rather than a winning trade. So when you place a trade, it's not, oh, I can make this much. It's, oh, wait, I'm going to lose this much. Can I afford to do that? Or am I willing to do that? What do you think about short-term bearish trades on gold on low time frames? That's a good question. It depends on your strategy. So I know already that, technically you've just broken a previous low. So now you could, depending on the way you trade, you could say, oh, I'm going to short on the break of this support. It's not the way I trade, but I know people do make money doing that sort of thing, waiting for these small time frame, low time frame breakouts. So yeah, personally, I wouldn't look to short this at all. But yeah, I'm not saying shorting it is really a bad idea if you are looking for a short-term trade. If you're trying to swing trade the short position, I'd say you're in trouble.
All these aerospace defensive stocks, they're all up. Lockheed Martin at all-time highs, Raytheon at all-time highs, right? I mean, look at Lockheed Martin missing revenue, it's down. Frank and I talked about this one on Monday, and it did exactly that. It actually dipped post earnings, but I didn't take the trade. I don't know what it would have been if I did a bear put spread. I don't know if it was cheap enough to take, so I didn't take a trade. But either way, I mean, if you look at what this stock does, I mean, that's a crazy aggressive move from July this year to now. That's a lot of direction without any pullback. So it makes sense we're getting some type of pullback. I would look to see if we, settle in and then close back above a 50, that we can maybe start participating for higher highs again. Otherwise, what goes up aggressively and inefficiently comes back down to rebalance. And then we'll find some support maybe at this like 100 or 200 EMA. Okay. All right. Did Aussie CAD, did HWM, NQ, Aussie Swiss. I looked at Aussie Swiss. I'm still long on Aussie Swiss for some positive swap. My Aussie Swiss target is going to be up at the top of this yellow box. Resistance up here. There's symmetry measured up to 6,000 is fine. 6,000 is an acceptable price target. 60.50 would be my measured move. Yep. Okay, Euro Aussie. You're calling this one. It was a good opportunity to buy at equal lows. Right now, it looks like we have maybe this in the works. We're off of support, we go up, we pull back a little bit. If you get another breakout, we could see the Euro Aussie, range back up into these highs around 6,600. So it seems to be a range that's acceptable. That's a bit of an outlier high, but from 6,000 to 6,600, I could see this being a range trade. Okay. SPY, what does Edgefield tell you about the gap fill? Let me take a look. So SPY gap fill, I'm going to go out for the last 5 years. I like to go out to more data. And today, so gap fill on the SPY. First off, let's check the size of the gap. So here we had a gap of, we opened, so we had a gap of around 0.36%. So 0.36%. We do have a 72% chance by the size of that gap that we could fill it. Now, that's supposed to be filled within the same day. Now, that's a 28% chance it doesn't get filled. And, I don't know. I mean, yesterday, look at yesterday. So yesterday we had a gap fill. There was your high, your open. So there's your gap, and price spent all day until it finally filled. So today's price action, if we don't breach this low, and we bounce here, this market might do the same thing and fill today's gap. And there's your 72% probability. Okay. I'm just looking at this from the structure side of this has been a quiet week of trading with a tight trading range. If we breach this low, I think there's room to go lower. And guess what? If it doesn't get filled today, I'm still thinking this gap gets filled sooner rather than later. So yes, we might have a decline, but this gap is going to be something that the market can absolutely go after later on. So I'm watching the floor today. That's really what I'm paying attention to. Okay, by weekday, let's take a look and see how it fills on weekdays. If we gap down on Wednesday, that's a 67% chance we get filled. But I think by, by size is what I watch the most. I mean, 0.36 isn't a huge gap compared to like the, the 1%ers. Those are big gaps that usually don't get filled. Anytime you have a gap over 1%, it's only about a 35% chance it gets filled on a gap down and a 20% chance it gets filled on a gap up. So that's what's kind of crazy good about big gaps in the market is it's rare they get filled. But in those like, less than 0.5%, less than 0.4%, they get filled most of the time. So yeah, that's where we're at today. Watching the floor. Let me see. I'm going to move this chart alarm up to here. So 580. I'm just going to put a chart alarm at 580. 580. And Chandler, fellas, do I need to go? Is Nick coming on? If so, I can wrap things up here. Let me know in the chat. Is SPX good for a short? I have some hedges on the SPX. I basically just trade. Okay, no. Okay, cool. The SPX I usually trade daily for a little SPX daily income. And other than that, I use a lot of butterflies, a lot of broken wing butterflies. If I'm going to short just the index, I typically look at the SPY. I can buy puts on the SPY. I'll do hedges on the micro futures, so MES and ES. So this week in the pulver alerts, I put in a broken wing butterfly on ES, and I put in a long put on MES. And those are out for like election hedges just in case things go south. So if they don't, I'm willing to hedge it as things, maybe go higher. I offset those costs by my portfolio going higher. But I think it's a necessary evil right now just to make sure that I'm protected, and I'm not really looking at hedging as income plays. I'm looking at hedging as just pure protection. Okay. All right. I'll do a couple more here. I see euro dollar request. Euro dollar. I mean, it's the inverse of the dollar index, right? So, I mean, if I had a great trade on the euro dollar, it would be, I'd love to buy this thing at 106 and just buy it and not even worry about it. I think we've got some pretty good range structure in here. So if we come back down to 106, I like this zone a lot, and then pull back into halfway or all the way back up. We'll see what the dollar index does. So yeah, I mean, until this thing turns, go to the 1 hour chart, there's no sign of bullishness yet. And I mentioned this last week, right? I had mentioned, I think when I did that little top strategy session with Nick, or I hosted for like an hour and 40 minutes. Look, this pocket is a great trade that will eventually get filled. The only issue that I have with it is there's no sign of this price action suggesting that we are going up right now. So as juicy as this profit target looks, as long as we keep going lower and lower and lower and lower, I'm just going to wait. But if we come into this 106 area, that's the spot that I'm looking to see if we can base and then start to work our way up, get above these trend lines on the smaller time frames, and then work our way back up to find that efficiency. So to me, that's a gap. And I think we get there, but if I look at it on the higher time frame, I really like to see the daily, right? Let's try to find a really key level of support. And I had mentioned that maybe this is good enough, right? But that is the equivalent of saying that, oh, the dollar index is going to also form a top right now. It doesn't seem like it wants to. So I don't like calling the bottom right there in the euro dollar without confirmation. So if this goes lower, then I'm going to get rid of that line that I just drew. This goes lower, that's fine. But in this area, way more interested. That would be a 600 pip drop. And if we have support, we keep the stop loss relatively tight, and we have a move back into like 109 or 110. But will the dollar give us that confirmation? We'll find out. Okay. All right. W pattern on the NQ. Where at? Is it this? That W pattern? mean, this is just kind of drifting right now. I do wonder what the oh, you're looking smaller time frame, right? Yeah. I was talking about this on the NQ or the Nasdaq, which would be, we had that high to low. A lot of people said when this crash happened in August, a lot of people were like, oh, the top is in. We're not going to find the highs. Well, they were clearly wrong. Like Nasdaq hasn't found the highs yet, but the SPY did multiple times. We have 47 all-time highs for the year. The Dow did as well. Nasdaq, making its way up, making its way up, making its way up. Is it possible that this hits these equal highs and blows that out, or is it hit the equal highs and then range? I don't know. Okay, I don't know. But this is what is all coming in the next couple of months. We're going to find out whether this market is truly in melt up capitulation territory to just more all-time highs, or this market has seen its highs and it's going to be difficult to breach them once again. Right? So we'll watch. I'm watching highs. Dow pulling back off the highs. SPY pulling back off the highs. Russell a little bit more volatile. It's funny how the Russell was outperforming indexes last week, and that was the weakest one. It's very sensitive. Poor little guy.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.